So what kind of system have you put into place? Is it more psychology framed or more liquidity pools? And is it technical based or psychology based, your partial taking system?
My partial taking system is now it's at logical levels. I've gravitated to an understanding of where I think price is likely to go and where it shouldn't go. And this is one of the things, again, with ICT concepts, is when you understand like how the algorithms is going to index premium discount arrays in price, you can see, right, okay, I can see what price has already done. And this is the game changer for me. And I think this is what separates ICT with any other thing, especially when it comes to like risk management and stop loss, especially because I know where price is not likely to go. Do you understand? So if it's not likely to go there, I know like I can place my stop and be comfortable in that position. And then that will allow me to assess the risk going forward. And I can see, okay, if I'm grading this range, I know that based on what price action is previously done, and then looking at what the higher time frame order flow is, I'm likely that we're in like we're bearish, right? So the higher time frame is going lower. I know that if I hold this too long, I'm likely for price to reverse and come back on me because I can see that price is going higher, right? On the lower time frame versus the higher time frame, and the higher time frame order flow is bearish, right? So what I generally do is I'm looking for like that weekly expansion. If that weekly expansion is poised to go lower, then I'm waiting essentially. I'm waiting for the market to move in the opposite direction on the lower time frames, right? So once it takes out, say, buy side liquidity, if we're going lower, right? Then I know that it's already taken that liquidity. And if it runs lower, creates a fair value gap, there's a break in structure, that fair value gap's rebalanced. It's not likely for that algorithm to go back up to those highs again, right? Because the algorithm's done what it needs to do, right? So when I can assess what the algorithm is not likely to do, I can then assess what the algorithm therefore is.
So when you say logical levels, there's obviously a hierarchy within that.
Yeah.
Is the primary, for example, do you believe in market structure, or does ICT use market structure?
Yeah, quite a bit.
Okay, so if you were to label a hierarchy between, let's say, the moving parts of liquidity, market structure, maybe a fair value gap, timing, what would the hierarchy look like?
A lot of it.
And how would you put it into hierarchy?
All of it. You blend all of that. You're blending time first because like I know that there's time in the day for the price to run like to a logical liquidity pool. If it's not done it by London, it's likely that the New York is going to be a continuation of London and it hasn't hit a higher time frame data point, right? So I know that price is not likely to reverse yet. Therefore, it will allow me to stay in that trade longer. If we've already hit that higher time frame data point by London and I'm like, okay, it's a Thursday, I know that from my past experience and collecting data that we may have a Thursday like midweek reversal here. And therefore, I'm going to like close positions, really. So I'm assessing constantly if I've got, say, prices coming in my favor, then like I'm reducing my stop now. But now I've seen that the market's likely to reverse and it's taken out 3 arrays to the high to the upside, and we've had a break in structure here that I could lose out on profits here. So this is why, again, essentially taking partials is essential. But when I say logical liquidity pools as well, the algorithm is really going to gravitate because it works on these principles of fair value. So when you're grading a range, it's likely to come back into the range after it's taken out either sell side or buy side liquidity. If I see that there's a fair value gap or an inefficiency around equilibrium, I know that, okay, it's going to be better for me to take a partial here. So when I say logical levels, I'm looking at price, like a price point where the algorithm could reverse from here. I'm not saying that it will, but it could. And therefore, if it could, it makes sense for me to take something off here, right? I might take 50% off here and I'll leave the rest to run because I've got a conviction that it might aim for that sell side liquidity pool down there, right? The higher time frame order flow is bearish. We've already cleared buy side liquidity. We've rebalanced all the inefficiencies above the market. We've come back to a logical level here. Take something off, right? Because there's no guarantee. It may reverse. But as you develop more experience in this, like you build on that. Do you understand? Like at first it was
because when you talk about, let's say, liquidity pools, let's say I've entered a buy, you have so many liquidity pools before it makes a higher high. You could have just, let's say, the last high or low. So you want to target that. Then you could have, let's say, an Asia high. You could have an Asia midline. Then you could have a double top right above it. Then you could have a smart money zone right above that. And then you could have a trend line. And then you have the higher high. So when you have like between, let's say, a 20-30 pip range to make that new higher high that you're looking to make, you could find 5 different liquidity pools along the way.
I'm always keeping an eye on the higher time frame. So that makes it like
So you're predominantly structure then for your
it makes it
alignments.
easier for me to like look at the lower time frames, because especially with me, I'm very, very impulsive. I can change my mind very quickly. So if I'm glued to the 1 minute chart, for example,
You'll get lost in the noise.
I get lost. I usually take my entries on a 1 minute or 5 minute. I can go down to like the 5 second time frames. I've taken entries on that, but because price is fractal, and again, when you understand how the algorithms work, what you see on the 5 second time frame is exactly what you see on the like daily time frame, right? Essentially, I'm keying my levels really of the daily on the weekly time frame, and that's essential. Anybody who's coming into ICT concepts, I would always say, if you're going to have any levels on your charts, look at the weekly and the daily, because that's your roadmap, right? I'm also looking heavily, and I didn't do this in the beginning because I didn't think it was that important. Now this is huge to my trading, is looking at what the economic calendar is going to do. The economic calendar is the smoke screen. So the news that comes out, they're all smoke screen for the algorithm to do what it's going to do, right? So if I can determine like where the high impact news events are likely to occur during the week, that's going to give me a huge amount of insight to say, okay, whether I want to hold for this position or whether I want to close this position, and is it fitting what the bias and the narrative that I already had pre-trade. Do you understand? If it does something that, okay, this has caught me off guard, then I'm like, okay, I need to reassess. Either I'm on the wrong side of the market here, or I need to close or get out of this trade. And that happens. I mean, we're not perfect. You have to, there's a game of probabilities. Do you understand? So this is, again, why I believe like taking partials is very logical. But for me, I'm looking at, if there's layered liquidity, I can see, okay, well, we've got a high impact news, say, for example, on Wednesday, right? I can see that on the weekly time frame, this is going to come into a logical level, right? It comes Wednesday, and I've got a trend line that's built. I love trend lines, because as this trend line's building, all the algorithm is basically doing is building market sentiment, isn't it? It's building sell stops that are going to be flooding into the market because people are trying to buy it as it's going higher, creating this really nice trend line, and people are going to put the stops below the trend line. Wednesday comes, we get high impact news, comes into a logical level, takes out buy side liquidity. It's done what it's needed to do. Now, where's it going to go? It's going to attack that trend line. You understand? So even if there's loads of different liquidity pools, I know, right, okay, number one, I'm going to take something off at a logical 50% of that dealing range. And this is where, like, when I say higher time frame and all of this, if you understand what dealing ranges are, that really gives you a huge amount of insight as well. If we're trading inside of this dealing range, then I know that, okay, we're likely to consolidate because we've got high impact news, say FOMC or something like that. NFP is coming out later on in the week. And we're staying inside of Friday's dealing range. Why are we staying inside of Friday's dealing range? Because we're building liquidity. That's all it's doing, until we get that news driver that's going to cause that manipulation event. So a lot of the time, you're just waiting. You're sitting on your hands. That's easier said than done.